Nvidia is sitting at $195 a share, down 17% from its all-time high. The AI boom is still raging. So, is this a buying opportunity of the decade, or is the smart money already heading for the exit? I ran NVDA through 15 institutional-grade AI frameworks, so you don't have to. Here's what the data actually says. Most retail investors look at Nvidia and see one thing: AI. But there's a lot more going on under the hood. Export controls, hyperscaler competition, custom chips being built specifically to replace Nvidia. Today, we're going deeper than any YouTube video you've seen on this stock. Let's get into it. First, understand what Nvidia actually is. It's not just a chip company, it's a full-stack platform. Hardware, software, and ecosystem all locked together. They design the chips, but outsource manufacturing to TSMC in Taiwan. That fabless model gives them insane margins. We're talking 75% gross margins, but it creates a supply chain risk we'll come back to. The real genius is CUDA, their software ecosystem that millions of AI developers have been trained on for 15 years. That's the moat, not just the hardware. Here's where the money comes from. Data center is the monster, tracking toward 80% or more of total revenue. We're talking Microsoft, Google, Amazon, Meta, all buying Nvidia GPUs by the billions to power their AI infrastructure. Gaming is still there, but it's the little brother now. Automotive is emerging. Nvidia's drive platform has design wins with Mercedes, BYD, and others. And then there's the wild card, physical AI and robotics. Jensen Huang has been talking about this a lot in 2026. It's early, but it could be the next massive wave. Here's why the bulls are still pounding the table. Number one, the AI infrastructure build-out is a multi-year cycle. Hyperscalers are spending hundreds of billions on data centers, and Nvidia is the default choice. Number two, Blackwell. Their new GPU architecture is a generational leap. The GB200NVL72 rack systems sell at much higher price points than anything before. Number three, software. Nvidia is becoming a software company on top of a hardware company. AI enterprise subscriptions, DGX Cloud, Omniverse. That's recurring revenue that Wall Street loves. And number four, sovereign AI. Governments around the world are building national AI infrastructure. That's a whole new customer base that didn't exist 2 years ago. Now here's what the AI cheerleaders aren't telling you. Risk number one, export controls. The US has been restricting chip sales to China. China was a massive revenue source. Every time Washington tightens the screws, Nvidia takes a hit. And this risk isn't going away. Risk number two, and this one keeps me up at night, the hyperscalers are building their own chips. Google has TP-US. Amazon has Trainium. Microsoft has Maya. Meta has MTIA. These companies have every financial incentive to reduce their dependency on Nvidia. That's a structural threat, not a temporary one. Risk number three, valuation. At $195, this stock is priced for perfection. Any earnings miss, any guidance cut, and you could see serious multiple compression fast. Risk number four, TSMC dependency. Over 90% of their advanced chips are made in Taiwan. You know the geopolitical situation. Low probability, extreme consequence. Here's the cold hard numbers. Current price, $195.74. 52-week high, $236.54. That means we're sitting 17% off the highs. 52-week low was $149.26. so we're 31% above the floor. No price target from me. Anyone giving you a specific number without current earnings data is guessing. What I can tell you is the range tells a story. This stock has been volatile, and the market is clearly uncertain. Here's your checklist going forward. Watch the next earnings report, specifically Blackwell ramp numbers and data center guidance. Watch hyperscaler earnings calls. If Microsoft or Google starts pulling back on CapEx, Nvidia feels it immediately. Watch export control headlines. Any new China restrictions move this stock. And watch AMD's MI350. If they start taking real market share, that changes the thesis. So what does the AI say? Nvidia has one of the most powerful competitive moats in the history of technology. The CUDA ecosystem is genuinely irreplaceable in the short term. The growth runway is real, but the risks are also real, and they're not small. Export controls, custom silicon competition, and a valuation that demands perfection. This is not a sleep well at night stock. It's a high conviction, high volatility position that requires you to stay on top of the news. If you're a long-term believer in AI infrastructure, the 17% pullback from highs might be interesting. If you're risk-averse, there are calmer waters. The data doesn't tell you what to do. It tells you what you're dealing with. That's the job. This entire analysis was generated in under 60 seconds using AlphaLens, 15 institutional-grade AI frameworks powered by Claude AI. You can run any stock through the same analysis for free at NorrisAI.us. Link is in the description. Not financial advice, educational purposes only. If you found this valuable, subscribe. We drop new analysis every Monday, Wednesday, and Friday. See you next time.